The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Happy Friday. Friday morning, 9:06 a.m. We got about a half hour to go until the start of trading, and the markets don't close overnight, folks. We got some action to the downside, quite a day to the upside last night. Just about to put a Fibonacci number to see where we're at right now. Yesterday on the S&Ps, you trade from a level of about 4182 up above 4,300 briefly. You're sitting just under the 50% retracement. That's right where we bounced at the close last night. We had Amazon earnings disappointing. Amazon down almost 10% right now. Apple beat in the current quarter. Outlook not too rosy. Supply chain issues, talking about $4 to $8 billion is going to be the hit coming up for Apple. That drops Apple into the negative afterwards. NASDAQ 100 right now, you're negative by 179 points. We jump over to the NASDAQ 100. These are 5-minute bars we're looking at. We're talking about a Fibonacci retracement sitting right at, again, a 50% retracement. So S&Ps and NASDAQ, similar action. Dow, not the same story. Dow down about 0.5%. In terms of where we are, not even close to half of the mark, I think. Yeah, sitting right at the 382 in the Dow, 33,664, and you got the Russell right now, probably right around the 382 as well, sitting at 1903. Crude continuing to rise, 106.77, man. We started off the week with a 95 price point in crude, folks. Remarkable action. Gold finally catching a bid. We were just above 1920. That's a $50 run from where we were early Thursday morning. We give up some of those gains. Right now we're trading at 1913, and we jump to the all-important notes and bonds, and you're talking about lower price and higher yield, folks. We jump over to the yield we're talking about right now, back above 2.9%, sitting just above 2.902 to be exact. Over in Europe, you got positive markets over in Europe catching up to what we had done yesterday as well. You had the DAX continuing to rise up 1.1%. FTSE up 6%, CAC roll up 0.5%, and over in Asia, you're talking about positive as well. Nikkei up 1.75%, Shanghai up 2.4%, Hang Seng closing 4% higher as Chinese stocks gain. Let's pull up that headline because pretty remarkable action over there. More policy support, right? They're talking about technology stocks surging on Friday after the Nasdaq soared at 3% overnight. Asia rose on Friday. Chinese stocks leading gains. Japan closed on Friday for the holidays. Important note there. Mainland Chinese stocks, sizable gains. Shanghai 2.4. The surge came after Chinese state media on Friday reported details of a Politburo meeting where officials promised more policy support to meet the country's economic growth target for the year. The most important message is a change of policy priority. In the past few weeks, the top priority seems to be containing Omicron. Now the goal is to balance containing outbreaks and economic growth. This suggests the government may fine-tune the zero-tolerance policy to allow some flexibility. That could be a monumental statement, folks, which I brought it up in the beginning of the program. Mainland China, as we all know in recent weeks, man, it is lockdown city. We'll see if that is actually how it plays out. I'm not sure how you transition from a zero policy to one where you actually factor in economic growth. That's a fine line. Where that line rests, that's quite a political issue over here. Boy, the poor people in China, though, just getting locked down, 10, 20 million. I had mentioned Florida, 22 million people. That's the size of some of the cities they're locking down over in China. It'd be the same thing as locking down every single person in the entire state of Florida, one of the biggest states in the union. All right, S&Ps continuing to drop. Let's jump over to the big dogs last night, man. Apple. So Apple comes out at 4:30. Amazon comes out right afterwards, I believe. So you got a spike lower, and we'll just jump over the S&P so you can see the action real quick. There is your spike lower. Yes, the 4 o'clock bar. Amazon comes out, S&P spike. There is your 4:30 bar on the Apple earnings. The reason why I bring it up, right, is that it was quite a quick give up, especially when the conference call began for Apple and they started talking about $48 billion. Supply chain issues not in the current quarter that Apple is giving. Supply chain issues coming up in the quarter that they'll be reporting, the next quarter. And look at these S&Ps, man. You just broke below the low that we got last night. S&P's down 51. The low last night was 42.35. We're trading at 42.32. Okay, jumping back to Apple shares. There was your, back it up a little bit. There was your acceleration higher to 170. You spiked down to 153 after the conference call, began to claw back some of those losses. We're sitting at 161 right now. We're only $2 away from where you closed yesterday, and keeping in mind that you're actually above where you started the day yesterday for Apple, and they just told you they're going to miss out on $48 billion of revenue, man, for supply chain issues. So let's jump over to that. Apple. New COVID-19 lockdowns in China are roiling supply chain. Dour outlook follows record sales for a non-holiday quarter, a pretty remarkable number in terms of what they're doing. They announced $90 billion with a B, $90 billion in new stock buybacks. The outlook, though, renewing fears that supply chain woes will continue to roil the tech industry following a short-lived recovery from the pandemic struggles. I'd say that to the least. You had Apple down lower. The latest supply woes didn't begin until the very end of March, Apple said. So the latest quarter wasn't impacted. Sales rose 8.6% to $97.3 billion with a B dollars. That's a record for a non-holiday quarter. They said earlier on Thursday, analysts were looking for $94 billion. Profit, $1.52 a share. Market was looking for $1.42. This is the reason why you saw that initial accelerate higher. Now, Apple had previously said the March quarter would be a record, though its growth rate would decelerate for both the overall business and its services segment. The December quarter was a blowout. I mean, look at some of these numbers, man, in terms of sales continue to grow, though not as fast as last year. And folks, some of these growths, 50% in here, you know. Amazon's dealing with a similar deal as they are just dealing with comps that are pretty bonkers. They're decelerating. But Apple had big numbers across the board, man. iPad, $7.65 billion. I think wearables was above $8 billion. Services revenue grew 17% to almost $20 billion. Here it is. Wearables generated $8.8 billion last quarter. The market was looking for $9 billion, though. Just staggering the amount of parts of that business that are doing just almost $10 billion. Staggering. All right, we jump from there to Amazon. The COVID era build out too much as demand cools. Revenue from main e-commerce business declines 3% in the quarter. They were dealing with overcapacity, inflation, supply issues, drive costs higher is the headline there. So Amazon is down. Let's pull up. They're down like 10%, man. AMZN. Continuing to drop. You are down $300, so more than 10% right now for Amazon, trading at $25.91 as the market's pulling back. As I said, the market is below where the lows were for the S&P last night, okay? So dicey area when you're down 52 points and you have the two big dogs last night, Amazon and Apple, talking about some big supply chain issues hurting their bottom line in a big way. Amazon's a little bit of a different story, though. Different company, of course. Lost money during the first quarter and gave a forecast that it said it may lose again in the current period. Sales will be as much as $121 billion in the 3 months ending in June. The market was looking for $125. Okay, now Jazzy is taking over. They're talking about many analysts saying maybe losing in money in North America, not what they were thinking. We'll go over some of this after the break, though, because Amazon, they've hired almost 800,000 people over the last 2 years. We'll talk a little bit more. Stay tuned.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&P's negative 50 points right now, and check out where we are. That acceleration that we were having yesterday from the lows of about 41.83, we trade up to 43.03. You're coming right into that 618 area, folks. We were at the 50 percent retracement kicking off the program. We've had a little bit of an acceleration. We just made it to a low of 42.30. That's basically within a point of that 618. So keep that on your radar. Maybe that's a focal point. We get a turnaround. Also correlates somewhat near the highs we had on Wednesday, an area that the market turned as well. NASDAQ 100, negative 193 right now. Whoops, back that out. Almost made it down to the 618 as well. A little bit far from there. $13,228 is the 618. We make it to about 13,240. Okay, back to Amazon. Amazon down about $300 on the open. Quite a pullback, man. And to get back into what they were saying here, so they have really built things out, and they're paying for it right now. The costs are piling up. $112.7 billion in total operating expenses. How do you compete with a company that's spending $112.7 billion in 90 days to operate their business, including $20.3 billion in fulfillment outlays during the quarter ended March 31st? What they're doing, so they have rising costs, okay? Now, the story's been out there that they're levying a first ever 5% fee on independent sellers who use its shipping service. Prime members in the US, they got their prices jacked up, I believe, the last quarterly earnings. That 5% fee, though, that's only on independent sellers. Many items Amazon ships themselves. So it's not like they can charge that fee. They got to pick up the slack, man, whether it's talking about oil, right? Shipment costs, human capital costs. Amazing number when you look at how many people they have hired. They've almost doubled their workforce in the last 2 years. I mean, wasn't Amazon a huge company in April of 2020? Yes, it was. Well, in the last 2 years, they've hired 780,000 people, bringing the total workforce to 1.62 million. It also raised wages, paid out bonuses for new hires, and was willing to send out half-empty vans to ensure customers got their packages on time. Here's what I'll say, folks. I do have Amazon in a retirement account. I am a long-term bull on that company. the build out that they have going on will serve them well for many years to come, because there's not many people that could make the case that anybody does the process better than Amazon does. Walmart should be in the driver's seat to at least compete with them, and they fail miserably, folks. And I still have some Walmart in a retirement account too, because the value of that company, Walmart, and let's pull it up because they've been on quite a tear. We actually have some Walmart in my newsletter, Rocket Equities and Options, folks. Do not have Amazon. That one, just a few shares in a retirement account, but Walmart's been on quite a tear. Check out the weekly. There's a breakout, man, of this consolidation we've been in since basically August of 2020. Now, part of the reason why I can say that Walmart fails miserably, yet there's still value, is that they're valued at $429 billion. That's about a quarter the size of Amazon, I believe. Let's see. Well, it's going to change as of today. Yeah, it was the quarter the size of Amazon as of last night. Amazon opening up at $1.3 trillion. Half of that value, maybe AWS. You're still talking about the retail arm valued at $650 billion, almost double the size of what Walmart was as of last night. Walmart, though, consistently failing in terms of the process, especially we have a Sam's Club membership in my house, and yes, they have some great values, all right? Well worth the money probably if you are buying enough items, buying in bulk, whether it's just the items that are non-perishables, right? You can buy some items in bulk, probably make up what you're paying for on a yearly fee. But what happens, I've talked about on the program before, man, I have ordered things delivered, okay? I think I pay an extra fee for Sam's Plus or something like that that offers free shipping. And many times I've had items show up in almost comical fashion. For instance, I have a 1-year-old. He's about to be 15 months. Amazing enough that that's a year and 3 months ago he was born. We got diapers, man. We got wipes. We got all that stuff, right? Imagine. Sam's always has a good deal. You buy 2 sets of the diapers. I think you get $5 off. It's not like those go bad. So we're buying 2 big boxes of diapers. We're buying 2 big boxes of wipes. All right, wipes. I mean, these are really heavy items, so it's pretty cool they get shipped. Well, what did they do? They shipped them all in one big box, folks. It was like a warehouse box showing up at my front door. I said, how's like what if you're a single mom and you can't even get the box in the door? I'm serious. I'm talking about 2 big boxes of diapers, 2 big boxes of wipes in one of the packages. Then what do? They throw a bag of Smart Food popcorn in there as well. Well, what happens? Those big boxes smash the Smart Food popcorn. There's popcorn all over the box. I open it in the house. There's popcorn all over my walkway inside, right? The entranceway to your house. And I can barely pull the thing in the door. Point being, how does that even happen from a process standpoint where somebody on the line is not saying, hey, we really shouldn't be shipping warehouse-sized boxes with 4 items that weigh 30 pounds completely and then putting a bag of popcorn in the end. So point being, all right, there is a tremendous value to what Amazon spends money on in the long run. I'm out near Lakeland, Florida, in the middle of Florida. Amazon has a huge presence here, probably because they can reach so many areas, especially when you're talking about an airport that they have. Attended an air show recently out here a few weeks ago. Absolutely amazing. Saw the Thunderbirds flying around. So cool with the kids. And I told the story on the show as well that part of the reason why they got to use the airport for the show was that they did not stop private or just retail consumers using the airport for their own purposes. They didn't want to disrupt any business, whether it was airlines flying out, whether it was packages. And so what ended up happening? Between about every 2 planes going off for the flight show, there was an Amazon plane taking off, flying packages out as well. So I'm seeing the warehouses going up, folks, and they have a process that is unmatched. And we are in a society that we're going to be spending money on online purchases, and eventually that's going to pay dividends. The market, they're a little worried. They're going to have to wait 2, 3, 4 quarters. We'll see in terms of making money. Very surprising that they're a company that will be losing money in North America. That's one of the points they make here. $112 billion, though. How do you compete with that company? Amazon was picking up planes at the bottom of the pandemic. I think they bought 22 or 27 planes of the story. Now, AWS, 37% increase in revenue, $18.4 billion. The company tally of commitments that customers have made to future AWS purchases surged 68% from the prior year. So this is talking about full commitments in the future that they have on the books, $88.9 billion. Net loss, $3.8 billion, though, for the quarter. It's a tough one, folks. They're using some of the money that they're making AWS to support the retail business, But how do you compete with them? Walmart is even struggling. Sam's is even struggling. And we are a society that orders everything online. I'm exaggerating to a certain degree. I love getting back out there, going some mall shopping. Buy the dip. That's a tough one, man. It is. The one thing I will say is $27.50. $24.49 is the 618. That's where we paused here back in April. The first initial thrust we got to 2020. That is the full run, folks. And it was a one-way trip, basically. We chopped around for a bit, but you made it up to $35.52 on a one-way trip in August. We're talking about almost, 18, 19 months ago? You make it to 3,700. We chopped around at the 50%, but you're going to open at about 2,600, 2,592, 300 points to the downside. It depends how long you're holding. You know, if this is a retirement account, you have no exposure to Amazon, and you're going to get some action, you could at least start a partial position here, man, because you're getting into companies that's $1.3 trillion. What are the odds that Amazon goes back under a $1 trillion valuation? I don't know. That one even in my own head. It's definitely possible, but is it going to lose another 30% from where we're at right now after this haircut? I'm not so sure. We'll talk a little bit more about this when we get back, because it's an important one. Amazon, we'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all Tigers and Tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now. Jumping over to the big dogs as they open. You got Amazon down 10.2% right now, trading at $25.96. We jump over to Apple shares. Apple catching a little bit of a lift. You're almost back to break even right now. You're down 1.1%. You're $8 off the low. Keeping in mind, folks, again, Apple, 16.3 billion shares outstanding. Every $10 you're trading, $163 billion in market cap. You're almost $8, $9 off of the low. Substantial move when you talk about the market cap. Let's jump over to Tesla. Tesla. See how Tesla's trading. News comes out, Elon sold a few $1 billion of Tesla shares, and he's done selling for right now. So you get a little bit of a pop on Tesla. I think relief rally as Elon may be done selling for the time being, up 2.3% for Tesla. We jump over to Roku with their numbers last night as well. They showed some growth, up 6%, still well off where the stock has been, but down to $75, man. You talk about some volatility for Roku, trading up 6.5% so far this morning on their earnings. And we jump back to Amazon as I finish up the conversation real quick. Down 11%, continuing to drop 25.75. One note worth in there is that they had a net loss of $3.8 billion. That included $7.6 billion in non-operating expenses. Now, their operating expenses, their operating profit, that was a tough one, man, no matter what. Non-operating, though, was they lost $7.6 billion by having an 18% stake in Rivian. So talk about some volatility, man, there. Almost a 20% stake in Rivian, and Rivian's had a tough quarter, to say the least. Okay, let's jump around to see what else we got going on here. Chevron out with their numbers. I'm going to jump around because we have a lot of headlines here to get through. Profit quadruples in the first quarter. Higher oil and gas prices boost operations. But guess what? The market pretty much knew that because Chevron was pretty much flat coming in, and they are basically flat within about within 7 pennies right now from where you closed. Chevron holds up well, though, on their numbers, and you take a look at where this stock has been. Yeah, from $92 in September to $116, so you better be having some decent profits. Okay, let's jump down the line. Robinhood. Yeah, be careful of this one, man. Down 10%. Let's see how they open. They lost 45 cents versus 36. Revenue, only $299 million. Monthly active users declined to 15.9 million, down from 17.7 a year ago period, and 17.3 in the previous quarter. A year ago, they were at 17.7. 90 days ago, they were at 17.3. Today, they're at 15.9, at least the end of the quarter, right? Average revenue per user, $53, down from $137 a year prior. They were making all their money off wide spreads for people buying and selling Dogecoin, folks. The main source of revenue is practice known as payment for order flow. They rolled out crypto wallets, option trading, the biggest area of revenue at $127 million, down from almost $200 million a year ago. It's just across the board, man. Operating expenses increasing 2 to 5% this year. It's going to cut its workforce by 9%, came out. They just got it all back, did they? They got it all back on the open. Well, we'll see where that one goes, folks. Right now, you jump over to the Analyze tab on the Thinkorswim platform. What are we looking at for a market cap of this company? Because it all might go bye-bye at some point. $8.7 billion for a company that is just shrinking. They're making less money off for users. Their costs are going up. Be careful, $8.7 billion. I don't know the fundamentals of the industry. Maybe somebody buys them eventually. I don't think that's going to happen, though. They're in a tough spot, man. They changed the industry in terms of free commissions. But I don't know how you're positive right now on what they came out with last night. We'll see if that rally holds. Maybe that's a little Wall Street bets going crazy. Who knows? All right. Yeah, some of those Asia stocks. Alibaba, look at up 12.8%. This is all having to do with that statement that we talked about to kick off the program, that they're now going to talk about growth and not just zero policy in Asia. You got the markets catching a little bit of a pop as well. We go back to a 5-minute. And the S&P, you almost touched that 618 down at 42.28, and you get a nice bounce, man. We're talking about 42.53. Interesting to see how we come up to 830, get a little bit of volatility. All right, speaking of that 830 volatility, man, we got so many stories up here to keep track of. Where are we? Here we go. So this is probably the 830. We get the Fed's favorite inflation gauge rose 5.2% in March as worker pay fell further behind. So this is talking about core personal consumption expenditure. PCE measures costs that consumers pay across a wide swath of items and accounts for how behavior changes in response to market dynamics. Increased 5.2%. Market was looking for 5.3 though, so less than the estimate on a month-to-month basis, 0.3%, in line with estimate, including food and energy, the PCE accelerated 6.6%, fastest pace since January of 1982. The headline inflation was up 0.9% from February, much faster than the previous 0.5%. So that number out at 8:30, and you get a little volatility, and now you have the market coming right back up to where we were on that number, 42.48 in the S&Ps. We see how Apple's trading on the open, positive. How about that, man? Whew. They're talking about supply chain woes coming up. Usually it's not what have you done for me last quarter. It's what are you going to do for me in the next quarter? If that's the case, man, be wary of Apple right now going flat to positive when they're talking about $4 to $8 billion hit on supply chain woes for Apple. And we jump to Amazon shares. They pretty much stay right where we were last night. We jump to Roku to see how they open. You're now up 8.5%. Chevron out with their numbers, basically flat. You have ExxonMobil out with their numbers as well, down about 0.5% as well. All right, let's jump around to what else we got going on. So we got to talk about Disney again, folks, because it's an unfortunate deal. You now have a ratings agency coming out warning Disney debt conflict could weaken other Florida government bonds. DeSantis was out there last night on Fox News saying that the taxpayers aren't going to pay for it. Folks, the bottom line is he can say whatever he wants because he's got no plan in the future, okay? The way it is right now, that district gets dissolved, okay? It's important to understand this, as Disney is going to end up being a political battle that's going to weaken Florida government bonds. This matters in the market, folks. Very unfortunate what's going on in the state of Florida. The argument last night from DeSantis was that if Disney was going to save money on taxes, okay, that they would have gotten this done a long time ago. That is false, okay? Disney is able to pay $163 million a year, that's what they paid last year, to their own district. That district then uses that money to fund a budget which takes care of municipal duties, okay? Whether it's talking about the roads, just plans, etc., what they're building. Now, if there's a couple issues here. Number one, that district has $1 billion in municipal debt right now. It's up for debate what happens to that. The counties may amass that debt themselves. Disney already pays the appropriate taxes that they would always pay as a landowner in the counties that they reside. That's not going to go up, okay? All that's going to happen is they would not pay the money that they normally pay to their own district, okay? And then what happens is when you dissolve that district, they are still paying the taxes that everybody else pays for basically municipal services. That's what you pay those taxes for. They're already paying those, okay? So I don't know what the plan is. There is no plan currently. All it is general talk, and it's very akin to that Mexico is going to pay for the wall, folks. It's so unfortunate what's going on, all right? It's just shooting from the hip. It's straight politics. The taxpayers are on the hook for the municipal services. And as somebody with a family, okay, in Disney, folks, I don't think this one's going to play out. There's plenty of reasonable Republicans in Florida that like how Disney looks with their streets, likes how the politicians are not in charge of taking care of how Disney looks. We're going to finish this conversation up when we get back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps negative by 35 points right now. NASDAQ negative by 130. Dow negative by 124. So I'm going to go back to Disney because it's just important everybody understands the conversation, folks, okay? All I'm trying to do is make you understand the facts of what's going on so you can think about things in a way that may help you get to an end result that maybe is more constructive for everybody, okay? What's going on in Disney, in my opinion, is not constructive for anybody involved in what's going on, okay? The state of Florida is attacking Disney. They're taking away their special district. That's going to eliminate $160 million in yearly taxes Disney pays. The municipal services will then be on those municipalities to pick up the municipal services. That is the function of government, okay? The fact that the governor's out here saying, don't worry about anything, it'll all be fine. There's no plan at all. It's not how government's supposed to work, okay? And this will hurt the Disney experience. As somebody with a 5-year-old, a 1-year-old, Disney shares in my newsletter. There's the bias, folks, okay? But we have investors. This is a market conversation that you can't be afraid to have because it is so punitive that the governor here is willing to hurt the company, the biggest employer in the state that pays abundant levels of taxes already, okay? And they're willing to hurt the taxpayers of the state and the counties surrounding that area, and they're willing to hurt the actual experience of the kids going there. The reason why Disney is willing to pay those extra taxes to control the municipalities, and I'm already seeing in here, you know, Fletch saying local building inspectors will have a field day at Disney. Not true, okay? This is why we're having the conversation, to separate the truth and the absolute falsehoods that are out there about this conversation. Disney already follows the same exact codes, regulations, buildings that are going up there. The only thing is they don't have to wait for all the government red tape. What happened to Republicans, okay, talking about excessive government regulation? Disney has some of the finest roads, municipal services out there. The experience of Disney is why it is such a successful company and why kids across the country and the world get brought to Disney for the experience, okay? Because they do such a good job at it. It's going to hurt everybody, folks, for political points. And DeSantis is more interested in running for national office than he is taking care of the actual citizens of this state, which is why he would pass something like that that effectively taxes the counties and the citizens of the state so dramatically, okay? There's nothing like the experience at Disney, and it will be an utter shame if the roads need to be taken care of by the counties, if the trash services need to be taken care of by the counties, okay? An absolute shame, let alone putting that money onto the state. If, folks, municipal functions exist to operate government. One of those things are picking up trash, okay, taking care of the roads, providing permits for buildings. What do you think is going to happen when Disney is applying to the municipal areas for those permits? Somebody in government is going to have to be approving those. Somebody in government is going to have to be accepting a wage that's not going to be paid for by extra taxes. All right? So you hear things going on with DeSantis. Remember this conversation, okay? And remember what's going on. Because unless something happens, it is going to be a bad deal all around. He's saying it's not, okay? But as usual, there is nothing behind those statements. And that should frustrate everybody, folks, when you're talking about this type of harm to such a company that is providing so many jobs and to the experience they provide, and somehow everybody is behind DeSantis and he has no plan whatsoever, okay? It's a punitive action, and I'm not going to go quietly while I let them just trash a company like Disney like this and ruin the entire experience, okay? Because we all know what roads look like and what municipalities do when you're run by government, okay? It's not the same in terms of the Disney experience, and that is what is at stake. It's a horrible deal. I can't even believe we're having the conversation as I run it over in my mind. But that's politics these days, which is a bummer. All right, jumping back to the market, let's jump around, because as I said, we got a lot of headlines up here. Let's see, we're going to jump down the line here. What do we got? We talked about it. Let's jump down the line. Yeah, how about this? The Fed outlook, right? Powell, maybe we're going to slow the rate hikes. We're talking about 50 basis points for 2 meetings and then smaller steps. No appetite right now for 3 quarters. Let's keep going down the line. Yeah, ARK Innovation, man. I was talking about ARK with friends yesterday. It'd be interesting to see where this one goes. But ARK, you make a low of 45.89 yesterday. I think it's the worst month, 26% drop. Yeah, boy, it is a tough one, man. Teladoc kind of exclamation pointing everything out yesterday. You're down from 160. You make a low yesterday of 45.89 in ARK. When you look at some of the companies, man, you know what I'll do? At the break we have coming up, I'm going to pull up. I found a site last night with some of the top holdings. Pretty sure Tesla is still the top one out there. But, boy, some of the other big holdings, man. You might be at a situation where you're at a low. Zoom down from 600 to 100. Roku is one of the holdings out there as well, down from 500 to 95. We'll pull up some of those holdings at the break and check it out, but ARK down pretty dramatically. Yeah, Elon, there's the headline. He offloads $4 billion of Tesla. No more share sales coming up. Yeah, this one, talked about it yesterday. Eli Lilly, this drug, do some research on it, folks. It could be a big one. We'll see how it plays out. Let's pull up. Is it LLY? Yeah, Eli Lilly. Now, this thing's been on a tear, so maybe, you know, the tough part about this is you never know who knows what, folks. And there's always somebody smarter out there, and you're trading off fundamental news like that. When the study news breaks, there's probably a lot of people that already have at least expectations that that drug is going to play out. Just this year, look at what you run. February, you go from 231 to 314. But boy, there's a couple holy grails out there. The cure for cancer, probably the first one. The cure for obesity might be number 2 out there, man. And pretty startling results. 21% of their body weight, or roughly 50 pounds, is what the drug let them lose. Not let them lose, had them losing. An average loss of 15 to 21% on the highest dose. So they had different dosing in there. Yeah, I was reading about this yesterday. There's a few articles. Tirzepatide, I believe. They mimic the effect of 2 gut hormones, suppressing appetite and potentially increasing energy expenditure. Tough part about this one, folks, is that, like, whenever this seems to happen, there's always some side effects that have come out. What were the 2 big drugs in the late 90s, right? That ended up, unfortunately, they were taking it and then it came out. I'm not sure that there's a holy grail for something when the amount of food we have in front of us, folks, and the lack of physical activity, because many times we eat when we're not hungry. And that's the tough part. I mean, we all do it, man. I do it all the time. We all do it. There's not going to be a magic drug that does it to that degree, because there's always going to be appetite that you may have that isn't really driven by pure hunger. That's the tough part. And if you're sedentary and you don't move, that's another tough part of it, folks. Since we're on health, go take a walk. It's like the best thing you could do for yourself, all right? Go take a walk. The moment that you stop taking walks and can't take walks, folks, you're done, okay? Go take a walk. It's one of the best things you can do for yourself. You take a 30-minute walk a day. You go from there. You take an hour a day. You don't need to do anything more than a walk. It's a great thing. It does so much for your health, let alone the time you have just to kind of think about it. I'm going to pull out some of those ARC holdings when we get back, folks. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps negative by 44 points right now. NASDAQ 100, you're negative by about 1%. S&Ps about 1% as well. Dow off 0.5% right now. And you got the Russell flat back to 1914. I mean, check out the Russell not getting hit by the likes of some of those tech companies. The Russell almost back to the highs of yesterday at 19. Highs yesterday in the Russell, 1925. So I was talking about ARC. Interesting. Jumping over to the trades that she has. Now, this site, I'm not familiar with if this site is 100% accurate, folks. I found it by Googling. It's called kathysarc.com. Probably just tracks what she's doing out there. I'm pretty sure you can find the official filings probably at the SEC or somewhere like that, maybe even at her site. But if it's accurate, she was buying Teladoc yesterday, 386,000 shares. She was actually selling Tesla as well, selling 10,000 shares. You see the buys and sells as they're listed. Now, the Tesla sale, 10,000 shares, Tesla. There's the chart of Tesla. Oh, no, that's the Russell, excuse me. TSLA, Tesla sells off big yesterday. Maybe that was some of her sell-off in the beginning of the day as she tried to get that money. I chose 850. That's where it was, middle of the day or so. It's back at 921 right now for Tesla shares, up 5% as the news comes out that Elon is done selling. Thanks, Dan. You can subscribe to her website and probably subscribing as in just signing up for the emails, and you get the notifications at night if you're really interested. So she sells Tesla, and she buys 386,000 shares of Teladoc, TDOC. Teladoc, maybe it's trading at $30, so 30 times 385. Whoops. Let's see what kind of 30 times 385,000. So she bought 11.5 million shares of Teladoc, sold 8.5 million of Tesla. Maybe those numbers equal out if she got different execution of pricing. But interesting, she's buying for Teladoc, man, even after that quite a pullback for Teladoc. And the one thing that you could look at here, that is the trades. When you look at the holdings, okay, Tesla, the big number there. You're talking about more than 9%. Zoom, Roku, Square, okay, Teladoc. So let's just jump to Zoom. Look at that pop, 4.43% today. You check out the 3-year weekly. Maybe it's a buy, man. Maybe you're back to the areas. Roku, pretty similar action, back to almost where you started off with, right? What were the other companies? Square, pretty much the same story, as in you're almost back to pre-COVID levels of Square, sitting at 108. A lot of these companies, man, let alone Teladoc, TDOC. Yeah, they have a big problem, man, but you're back to prior to COVID levels. After being at 308, you hit 28 yesterday. S&P's catching a little bit of a bid. We're negative 25, folks. Stay tuned. Live programming all day. Basil's up next. Larry at 11. Fast Market. Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great Friday, everybody.